Accountancy. This is Satish Kumar N. Mahale, Assistant Professor of Commerce, Government First Grade College, Bada. In this video, we are going to understand the format of the Statement of Assets and Liabilities as mandated by the Companies Act 2013. We know that the Companies Act 2013 mandates us to prepare the profit and loss account and the balance sheet as per the vertical format. So let us have the assets and liabilities. Here it is known as equities and liabilities. Under that, the first division is shareholders funds. Under shareholders funds, we have three categories, that is share capital, reserves and surplus, and money received against share warrants. Second subheading under equities and liabilities, we have share application money pending allotment. And then the third division is non-current liabilities. Under non-current liabilities, we have long-term borrowings, deferred tax liabilities, other long-term liabilities, and long-term provisions. Under current liabilities, we have another four subdivisions, that is short-term borrowings, trade payables, other current liabilities, and short-term provisions. So this we get the total of the liabilities. Then going ahead, looking at the asset side. Asset side, the first main divisions, we have two main divisions. One is the non-current assets. Under non-current assets, we have fixed assets. Fixed assets can be further divided into are further divided into tangible assets, intangible assets, capital work in progress, and intangible assets under development. The next we have non-current investments, deferred tax assets, long-term loans and advances, and other non-current assets. Next, we have second subheading under asset side, that we have current assets. So current assets, under current assets we have current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. So here this is the basic format of the statements of assets and liabilities. So here we are looking at the general instructions, or the different schedules, how they are prepared. So an asset shall be classified as current when it satisfies one or more of the following criteria. It is expected to be realized in or intended for sale or consumption during the normal operating cycle. It is primarily for the purpose of being traded. It is expected to be realized within 12 months after reporting. It is cash and cash equivalents. An operating cycle is the time between the acquisition of assets and processing and their realization in cash or cash equivalents. A liability shall be classified as current when it satisfies one of the following criteria. It is expected to be settled by the company. It is held primarily for the purpose of being traded. It is due to be settled within 12 or after the reporting period immediately, that is. Uh, a receivable shall be classified as trade receivable uh, of its respect due to the amount. A payable shall be classified as trade payable if it is in the amount due. The company shall disclose the following notes. So here we are going to discuss how each and every item is going to be calculated. Firstly, we start with the share capital. The number and amount of shares authorized, the number of amount of shares subscribed and fully paid up, par value of the share, reconciliation of the number of outstanding, and less calls in paid and forfeited shares if any. So this is how the share capital is calculated. Then reserves and surplus. The following are the important reserves and surplus: capital reserves, capital redemption reserves, security premium reserves, debenture redemption reserves, and revaluation reserves. Long term borrowings can be classified as bonds, debentures, term loan taken from banks, deferred payment liabilities, deposits, and so on. Other long term liabilities can be classified as trade payables and others. Long term provisions can be classified as provisions for employee benefits. So these are taken under long term provisions. Short term borrowings. Short term borrowings shall be classified as loans repayable on demand from banks, loans and advances from related parties, deposits, other borrowings and advances. Other current liabilities shall be computed as follows: current maturities of long term debt, current maturities of finance leasing obligations, interest accrued but not due on borrowings, interest accrued but due on borrowings, dividends unpaid, and unpaid maturity deposits and interest accrued thereon. Short term provisions include provisions for employee benefits and others. Then land, building, plant and equipment, furniture and fixtures. Then we have intangible assets. Intangible assets, as we know, are classified here as goodwill, brand, trademarks, computer software, mining rights, etc. Non-current investments. Include investments in property, investments in equity instruments, investment in preference shares, investments in government securities, investments in mutual funds, investments carried on other than cost stated. Long term investments. Current investments include investments in equity instruments, investment in preference shares, investments in government or trust securities, investments in debentures or bonds, investment other investments. This is of valuation of individual investments, invest and the valuation of stocks also need to be disclosed in the balance sheet, how it is calculated. Then inventories. Inventories shall be classified as raw materials, work in progress, finished goods, stock in trade, uh, stores and spares, loose tools. So all these come under inventories. Then we have trade receivables. It includes all the amounts that are outstanding for a period of exceeding 6 months. Trade receivables shall be subclassified as secured and considered goods, unsecured, doubtful. Then we have cash and cash equivalents. It mainly includes cash in hand and balances with the bank. Short term loans and advances, it basically includes loans and advances to related parties, others. Okay, so basically current assets, it includes all those assets which do not come under current assets. We take them under other current assets. And lastly, contingent liabilities. Contingent liabilities shall be classified as claims against the company not acknowledged as debt, guarantees, and other money for which for which the company is contingently liable. So these are the what you call as notes or the items based on which the total format is prepared. That is the format of the assets and liabilities. For further references, you can either refer to Corporate Accountancy by Dr. T.N. Godi and Corporate Accountancy by P.C. Tulsian or Corporate Accountancy by M.B. Kadkol also you can refer. So these are the notes that have to be prepared while we prepare the balance sheet. So I hope the balance sheet, what we looked into this here, again we are just taking into look. So equities and liabilities. Okay. It includes four main headings, that is shareholders funds, share application money pending allotment, non-current liabilities and current liabilities. So four subheadings under equities and liabilities and two main subheading under assets, that is non-current assets and current assets. And we have discussed in the notes that how these individual items are calculated. This is for your reference, and for further understanding you can have a look at the PPTs and the study materials that is sent, and also you can have a look at the reference books and solve the previous year problems. I hope the you got a glimpse of how the format of the assets and liabilities are prepared as per the Companies Act 2013. Uh, Thanks for watching this. I hope this video was firstly helpful. Thanks for watching this video. Until the next video, bye.